Because if we fall below that, I think it's like around 19.8 or so, and we do a retracement from our last run, that's going to be catastrophic for the entire crypto market. Welcome back, YouTube. In today's video, we're going to cover a lot because there's a lot going on. We're going to take a look from several aspects: Bitcoin, Dogecoin, the Fed, Celsius, go over some notes. So just bear with me today because this may be a long video. So first up, we're going to look at Bitcoin because obviously this is going to be the market indicator, and it's the breakdown. This is the Goliath of the market. This is the same coin that when I said it was going to go to 20K, back in like November, October last year, and also earlier this year, they said that was crazy and it was impossible. And here we are at 22,548.99 with no end in sight. So we're going to take a look here at the technicals, and then we're going to dive more into the market. So what we're seeing here, even the pause and the rebounds that we were getting at around 30K, that was all normal for Bitcoin. We can take a look here and see several times, even back here in January of 2021, where we would get bounces off of the 30K area. If you look, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So I say at least, just roughly looking at this without even zooming in, I say at least 12 to 13 different bounces around this area. So that rebound we would get from 30K and run back up and stuff like that, this is stuff that we've seen on many, many occasions. And that wasn't an indicator that that Bitcoin was going to go to the moon or that it was going to do its rally to 100K. I often said over the last few months that this largely depended on the Fed's actions and how they handled inflation, as far as what kind of year we're going to have, where they're going to do the right thing, where they're going to come in and be a little timid, I'll say, when they should have been more aggressive to get inflation and things like that under control. And they were coming in very timid. They did not want to rug pull the market when in fact we needed them to be very aggressive. And I have the notes here. We're going to go over a timeline to show you how many times the Fed has missed the market, well, misdiagnosed the market. I'm really surprised that Jerome even has a job at this point. This is just ridiculous how many times they've been wrong. And now they may be in a position where they're going to be more aggressive to try and get things under control, because clearly they've been behind the ball for well over a year. And if you look at where Bitcoin is right now, you'll see that this free fall that we're in is nothing more than us filling and gap up in price. Whether you can call it algorithmic trading, whales, stuff like that. This is more or less us filling a gap up in price that we had over a year ago. This is what I say many, many times in multitudes of different coins. When you have these rocket ships to the moon, they're fun to ride up, but they are hell on the way down. And every time it's to the moon or when you're going up and people scratching their heads and like, why is this falling? It seems like it's free falling. Look back, and this is why I zoomed out so much, because I want you guys to see, what do you see here? We're in this area right here. Just look at this red line that's being charted directly across. What do you see here? We're literally just doing the opposite on the other side. It's literally called filling the gap. It's like a basic principle here. Again, nothing's 100%, but it works out often, especially since we have a lot of retailers in the market now where these gaps certainly get filled. And it can take months, it can take weeks, and obviously it can take years. But if you get back to that point, you have that sell-off or that free fall where people are, or the institutions are withdrawing money, and they will have that free fall until you hit support. Now, initially, I said that we'd fall to around 20K. And hopefully that is where we get the rebound and the Feds do the right thing now to kind of install security and faith back into the market. Because if we fall below that, I think it's like around 19.8 or so, and we do a retracement from our last run, that's going to be catastrophic for the entire crypto market. Crypto market cap is below $1 trillion right now. We peaked at 3.3 trillion. And I want to point out that this is what I meant when I say that the crypto market, or the money that's in the crypto market, is not our money. That is institution, that is retail money. And this is one of the things where I'm saying that you cannot pump a coin necessarily like to the moon or sustain it or take the crypto market cap to $10 trillion, because retail does not have that kind of money. But I digress, and I'll save that for another video. This is Dogecoin's chart. Same thing we're doing here, which is filling the gap up. Now, technically, Dogecoin and what Dogecoin has been really excellent is that it has not, even though we had massive gain last year, Dogecoin did not immediately fill that gap. It was not rug pulled or simply like the whales had control of the coin. This is why I truly believe that this is the people's coin, because it did not simply fill the gap the way that even Bitcoin is doing. This is how, that's an indicator to how you know who controls the coin or who actually owns the coin. When you see the rug pull and you see that these trillions of dollars that simply disappear, retail did not. If you look at the market and they say, "Oh my God, $300 billion just vanished in the last 24 hours," retail didn't get $300 billion richer. Just keep that in mind when you start seeing these capitals and a lot of this liquidity just vacuum from the market. But anyway, if you look at here at Dogecoin, you'll see that the bottom part, we're literally hitting the pretty much like the bottom area where we had that massive support where we did that run up, that 5-6 cent area. So this is why I say that if as long as they come in and they do the right thing, which is be more aggressive. Now, yes, in short term, this could potentially rug pull the market, but at this point, the amount of fear and panic that's in the market, it's really not going to matter because they've missed the ball so many times. So they have a chance. I don't want to say it's our last chance, but they can't afford to miss it anymore. Otherwise, we're going to be looking at probably, I don't want to say like deep recession, like Great Depression type of BS that's going to come from this. And I wanted to go over a timeline here. I just grabbed my notes of the Fed's, I'll just say, mismanagement of what's going on here. August 2020, pretty much money printing won't cause inflation. We're actually facing deflation. February 2021, there is no inflation. June 2021, high inflation is transitory. August 2021, inflation has peaked at 5.3%. We're headed on the way out. We're headed down. Everything's all good. September 2021, inflation is getting worse, but it's still temporary. No need to panic. November 2021, inflation is not transitory, but the inflation we're seeing is good. It's a sign our economy is strong. February 2022, inflation is high, but the Fed has it under control. The economy is stronger than ever. April 2022, inflation is our top priority. May 2022, inflation peaked at 8.3%. Things are improving and the economy is doing great. June 2022, inflation is getting worse. And yes, we, the government, admit that money printing did cause some of this inflation, but most of it is because of Russia and China. Otherwise, AKA Putin did it. The biggest thing that we have to deal with here going forward is the fact that there is no solid plan for to get inflation under control. We have no solutions for the macro events in our economy. We have mortgage rates that are literally going to the moon. We have, especially as monies get more expensive, as they're being forced to raise these interest rates or these basis points pretty much behind the actual rate of inflation. And we're watching dollars and everything else become weaker, and it become more and more expensive to borrow money. This is going to slow the economy. And pretty much when you're in a situation where the federal government has to pretty much force a recession to get inflation under control, that's an indicator of how rough this time period is going to be. The government, once they actually raise the rates to the level that they need to and pretty much force a recession, that's going to, when you're at that level, you cannot have like a soft landing or it not be a rough period of time. That's why I made a video called Before You Buy the Dip, and I'm asking you, should you actually trust them at this point? Because they've missed the mark many, many times. And before we're going to see a turnaround in the market or see the bull run actually come back, those macros must have solutions. Inflation sits at the heart of that. There will not be a bull run until that macro has a solution. That's the end of it. I don't care what YouTuber, what influencer, I don't care what the charts. There will not be a bull run until that solution has been put forth. Until we see interest rates go down, we are not going to see a bull run in any of the markets, and with inflation threatening 10% plus. And we know it's higher than that actually, but I guess by the Fed standard, 10% plus. We will not see a bull run. And what we have to really focus on is that we have to hope that they get things under control before this really, really starts to strain the actual retail sector. Because the hedge funds and stuff like that and the whales, they have a lot more money. there'll come a point where we'll see there'll come a point where the retail sector will have to start selling off a lot of their investments for necessities if we stay in this too long. And this is kind of what happens out when you have the actual bottom and people are like, oh my God, I don't have any money to buy the dip. And that's where all these big companies come in, your Apples, your Microsoft, your Amazon, these large whales of companies that come in and they always acquire different businesses and put them under their umbrella. That's where they come in and scoop up these deals. And then they go off and run to set all-time highs on the next bull market. But everyone else that bought the dip or they bought way too early, they've either ran out of money or to buy the actual dip, or they've had to sell at a loss to take care of more urgent matters. We have to not invest with emotions and look at the facts. And I know that sometimes I post jokes about, people, doing the just the BS or like the clickbait titles and stuff like that, but it's a real thing. And I don't want this situation here for it to be just a devastating time for everyone, because we know that a lot of times where people are going to say, or a few weeks ago, it was, just the sentiment was big pump coming and reversal and this kind of stuff like that. And I get it, it gets clicks and stuff like that. But when you put the information out there, people actually believe that, and they end up either, making mistakes, blowing up their portfolio, getting their portfolio all jacked up, or simply buying the dip way too early and it dips even further, or if we're even nowhere near an actual turnaround and now they're even further in the red when they could have capitalized off of a deeper dip. That's pretty much what I was talking about when I made these, I guess if you want to call them predictions and stuff earlier this year. This is the things that I saw coming. Be careful with that. We're already seeing companies, even like Celsius, pretty much turning off withdrawals so that, you're pretty much stuck in there. And this can happen across the market. We've seen banks do this and, extreme times where you're not able to get your money out. So this isn't like an uncommon thing. When money gets low, and that's pretty much what's happening now in the crypto market. There's a run on the market. Went from 3.3 trillion to now just a few hundred billion. And we have to look at the truth of what crypto actually is. I mentioned this in my last video when Warren Buffett said he had to choose between all the gold in the world and about 11 Exxon Mobils. He chose the Exxon Mobils because those companies are going to produce readily available cash flow consecutively, monthly. And we look at institutions and the whales who do control the crypto market, who most of the money in the crypto market belongs to. Retail did not put $3.3 trillion into the crypto market. They're going to choose the stocks. They're going to choose the positions that they've shorted, that they're overly leveraged in, to exit those positions in times of disparity and stuff like that. Crypto, you only make money, especially residually, if you short it or if you exit the position. You're not going to get paid on it every month. So when this is not a surprise here, when you see the economy breaking down and money getting tighter, they're like, hey, which ones do we have to sacrifice at the greatest speed? Where do we have to pull the money from to acquire to free up the capital here in the stock market, to exit these positions that we're short on over here, to cover these positions that we're short on over here? Where are we going to get the capital? They sell crypto first. They're going to sell crypto the fastest. And this provides a great opportunity for retail if you're in position. Let's take a look here at the shorts here for Dogecoin. This is another thing when I say that typically you only make money just residually, especially if you short. And they love low volume. They love panic in the market. They double down on shorts. Most hedge funds and stuff like that, they have way more money in short positions than they do in actually long. They tell you to hold, but they're going short. So if you look here, like I said, with Dogecoin over the last few weeks, they're going to use this opportunity here to double down in shorts, and we're going to see an all-time high in shorts, and we're going to set a new higher high in shorts. And it's literally happening exactly like I said it was going to happen. This is where we are now with shorts. 36.84% up today. And the 21-day has blew past the 200-day moving average, which is this red line. The yellow line is the 21-day, the 200-day is the red line. 21-day has blown past it, and we're literally up here setting, not records, but we are on par with the same amount of shorts that they were using to battle 16-cent Dogecoin, and now they're using it at 5 cents. So this is what I meant by them saying that they're going to have to be more aggressive to get the price down. So we're going to see record short positions here in this coin soon as they try and get the coin as low as possible and take advantage of this low volume. So people say the market's red. No, there's green somewhere, because they love to make money on both sides. So if they can't make it going long, you best believe in the low volume coins, low volume stocks that they hate and that they want to go away anyway, you best believe they're going to double, triple, quadruple down to try and make additional money and simultaneously drive the stock to hell. So I say that to say this, we are not out of the woods yet until we get some solutions here on the macros. That is the biggest thing that we need in order to solidify a reversal or even have a hint of where the actual floor is going to be, because these crypto, we can still go down a lot further. And this isn't specific to like a Dogecoin or a Bitcoin. I'm saying in general, they can continue vacuum out the market. Yes, this will provide great entries. I'll make a video soon off of the coins that I'm going to make your entry on within like the next 24, 48 hours. But this is going to provide an opportunity here if you're able to hold these positions. And a lot of these different coins you're able to hold for a few years. The Bitcoin cycle was typically, if you held previously, it was typically if you held for at least a minimum of like 4 years, you're guaranteed to make several 100% of your investment. Like it just happened always. We don't know if we're going to break trend this time or not, but we'll see. But this is just an opportunity here. If you're able to hold, this can be, you're going to pretty much, the gains you can see here can dramatically more than you can see like in most any other market. I will keep you guys up to date as we get more information, as I get these entries and pinpoint where we're going to see some resistance at. I will certainly upload those videos. If you found anything I had to say had value, hit the like button, share the video with a friend. And if you would like to support the channel, you can do that for free simply by subscribing to the channel if you want to hear more from me. I appreciate all of you. Thank you. And until next time.